Hi guys, welcome to my channel. I am Friday's Trace. Today I'm actually going to be discussing about GBP that's British Pound US dollars. I am one of the best traders. I'm one of the best traders in Africa. I trade GBP USD as a pay. I also have a trading a store on nqf5.com where you can actually go to my store on nqf5.com and you rent any one of my EAs in case you don't want to trade. But then I am here to open your eyes on the financial market and teach you what is happening in the market. I also offer a mentorship program where I hold your hand one-on-one and teach you what is happening in the financial market globally. As a matter of fact, like I said earlier, I'm one of the best financial experts in Africa. I am Friday, your anchor on Friday's Trades. So today we'll be discussing about GBP USD, and I'm going to open your eyes on some of the things that are happening in financial markets. Recall that recently I have been teaching you about my last class on Bitcoin, that is BTC USD, was on market order, how the market is booked. I also taught a brief class about trading range. So today I'm going to expand that class. I'm going to show you that it is what actually happens in one pair that happens on the other pair. Nothing, they are just the same. The only thing is that it's left for you as a trader to understand how the market is booked, understand how the algorithms that controls the global financial market, how it books the market. Once you understand how it books, you can trade any pair. The thing there is that if even if you are trading 100 pairs or 1000 pairs, it doesn't make any meaning. They are all the same. Once you understand it, like me, I trade only GBP USD. That's the only pair I trade. If you follow me either on my WhatsApp or on my NQ, my store, on my profile on nqf5.com, you see that it's only GBP USD that I trade. That's the only currency pair that I trade, because they're all the same. Even if I'm trading gold, it will still give me the same result. The only thing is that gold moves more faster. But me, I like GBP USD because it has, like, it's a bit controlled. There are not too much manipulation on GBP USD. So guys, in case you want to follow me, in case you want to join my inner circle, in case you want me to hold your hand, in case you want to join my mentorship program, I'm going to be dropping my WhatsApp number below this video in the comment section, where you actually chat me on WhatsApp, and then you'll be part of my mentorship program. I will hold your hand, that because there are some things I may not be able to teach in this class, because this is an open class. I may not be able to. There are some things in the markets that I may not be able to teach you here. But if you are part of my inner circle, I can hold your hand. I can also always be teaching you, explaining everything to you one-on-one, how the market is booked. So guys, follow me up as I give you in details what is happening. So let's go into the chat. Don't forget to subscribe to my YouTube channel. Subscribe, hit the notification button so that it will help the algorithm. Whenever I put up a new video, it will inform you, and you'll be able to watch the video as fast as you can, and you will not miss anything. So let's go into the chart. This is GBP USD, British Pound US dollars. You know, British Pound is the currency of the Great Britain, and then US dollar is the currency of the US. Why I trade this currency is because it is a bit organized. They don't manipulate it like other currency pairs. They don't manipulate GBP USD. So I I I am more comfortable trading it. So let's go into the chart. This is a 4-hour time frame. This is 4-hour time frame. This 4-hour time frame tells you what is happening in the market. What I do first is to look at the market. When I come into the chart, is look at the market from the bigger picture, from the bigger perspective, and see what is happening in the market. What is the market actually saying? What is the true picture of the market? That is what I look at the market first. I go to the higher time frame. I check it on weekly, I check it on monthly, I check it like this month, and this today, I think today is 27 or so. You know that this monthly candle is going to close soon. You see that volatility will come into the market so that the monthly candle will close. So it depends on what you actually want in the market and how you actually understand the market, because the way I understand things may not be the way you understand your thing. But the major thing is that both of us understand. If once you understand the market, once you understand how the algorithm that controls the financial market is booked, you don't have any problem. It's the same thing. The market is booked on certain algorithm. And like I say all the time, I say it is not your buying and selling pressure that actually makes the market to move up or down. The market has algorithm. There are macros and micros. That's the algorithms that control the financial markets. Those algorithms control the market, and they decide how the market is booked and how the market flows. There is nothing your buying and selling pressure can do. That doesn't have any shit to do with the market. The market runs on those algos, and those algos do not change. So once you understand how those algos are booked, how they book the market, how they run, you will always be profitable in the market when you apply good risk management, because risk management is one of the fundamental things in the market. Once you know how to manage yourself, manage your risk, play with the risk, and be able to trade effectively. So let's go into the chart. This is 4-hour time frame. I'm looking at the market. What actually made me to, if you look at this market, you see that when this market came to this particular place, what happened? When this market came to this particular place, what happened? You saw a double top. And whenever you see a double top, you are expecting a manipulation in the market. That is why you had something like this. Let me show you. That is why you had this, you had this, you had this, you had this. Became the level 2 of the market. So what are you expecting at this age? At this stage, you are expecting a manipulation, which is always 3 candles. The manipulation is always 3 candles. There are some things in this chart that I may not be able to explain to you, but this is the candle that actually matters in this market. This red candle here, this bearish candle, is the candle that actually define. If you look at it, you see that the market came and touched that particular candle. Look at where it touched it. When the market was coming to this side, you see a fair value gap here. This is a fair value gap. This is a fair value gap. What happened? Look at the structure. This was the previous low. This was the previous low in this place. You saw that the market manipulated. This is the exhaustion stage of the market. The market is booked on 3 stages. You have level 1, you have level 2, then you have exhaustion. How do you know that you have level 1 and level 2? Look at it. The market was going here. The market was going here. You see that each time the market comes and gives level 1, level 2, it will come and mitigate it. This is level 2. This is it. This was level 1. It returned. It created liquidity. It broke it. It offered liquidity. Each time the market offers liquidity to the other side, becomes level 2. And whenever it offers liquidity and comes down, you see that it will have to break one structure. It will have to break one structure and come down. This was the manipulation, because you had 1, you had 2 here. This one became double top. And whenever you have double top, what will happen? The market makers, they understand that anywhere you have double top, it is people's stop loss that are resting in that place. So they will have to clear those stop loss before they will come back again and begin to go down. So now you have 1, you have 2. What did the market do? The market cleared this place. You see that this is a balanced pressure range. That is what we call it, because the market has manipulated up 1, 2. The market has manipulated up. When the market manipulated up, when the market offered liquidity 1, 1, this is a double top. You see that the market went straight and liquidated these people. So these people are no longer in the trade. They are no longer buyers. These people who sold this market here and put their stop loss here, they are no longer in the market, because they have been cleared away. These people have been cleared away out of the market, so they are no longer in the market. Nothing will, their stop loss has been hit. Now, looking at it, what again do you have? You have this. This is a bottom. This is bottom, right? This is bottom, and this is a bottom. That's bottom, and then the other one is bottom. So when you have such a liquidity, When you have a liquidity in the market that has been cleared, what does the market maker does? What the market maker does is to clear liquidity. Their major function in the market is to clear liquidity. The market makers, what they do in the market is to clear liquidity, because they know that their interest is in the stop loss that people have in the market. So what do? They clear the stop loss. And when they clear the stop loss, what they call it in the stock market, they call it clear the board and clean the mouse. That is what they do. They clear the board. They clear. Look at double. This is a top. This is a top. Recall that I have been teaching you every time. I say that what there are two things that the market does. The market either offers liquidity or clears liquidity. These are the two things that the market does, and these things do not change. So it is when you understand how the market is booked, how the algorithm that controls the global financial market, how it books the market, that is when you become one of the guys that succeed in the market. And how do you succeed? Dedication, resilience, patience, commitment. When you are committed to the market, when you don't, because there are so many things that happens in the business of trading. What happens is that those who don't have patience, they lose their money. Those who have patience, even if you are losing money at the initial stage, nobody doesn't lose money in the financial market. But what happens is that if you are losing money in the market, what are you going to do? You have to be focused, because you know that that money you are losing in the market, whenever you understand the secret of the market, within 2 months, 1 month, you have recovered back that money. That's the principle. That is a very simple thing. If you want to live your life, if you want to enjoy life, if you want to be free from financial stress, then you have to be focused. You have to be determined. These are the things that you arm yourself with. Look at the same thing happened. You have a top here, you have a top, which is a double top. Remember that I told you earlier that whenever you have a double top or double bottom, know it that the market is at level 2. And another thing you look at is that you have internal trend, you have internal trend, you have external trend. You have internal trend, you have external trend, you have internal liquidity, you have external liquidity. You understand? Now, when the market manipulated, where did the market went to as it manipulated this double top and hit them? Because those people who put sell here, that when the market was returning, they at a particular stage they were in profit and they were happy that they are making money. You understand me? Meanwhile, they put their stop loss, either they come and put their stop loss just above this particular thing. The market makers know that people are putting their stop loss above this particular thing, this particular double top. They are the ones. Just like if you are building a house, if you are building a wall, you build this side and build this side. What is left for you to link it? And for you to link it, that gap that is left for you to link it is what we call fair value gap. Left between that gap, that the vacuum that the market makers leave, we call them their footprints, because they understand how they play with human psychology. It's a very very simple thing. It's a very very simple thing. They play with human psychology. So they understand that yes, some people out of mere greed, some people may be greedy, and will want to say, okay, since the market is coming down to this place, let me take this market down. I will not close my order. I will not close this order. Let me take the market. Maybe I will take the market down to the other, to this end. But you don't know that they are only going to offer liquidity. I recall that I told you that there are only two things that the market does. That the market is either offering liquidity or it is manipulating. It is clearing their stock. The liquidity that it has offered already, it is clearing it. So like I told you, this is a balanced pressure range. Because why do I say that this is a balanced pressure range? This was a top. Now you have one, two, which is a double top. Now the market had to return to this place. You had liquidity in this place, you had liquidity. Now they came and offered liquidity here too. Now you have liquidity on both sides. You have liquidity on the top and the double bottom. So what do? Recall that I told you that the market has three faces. The financial market has three faces. It has a certain level, level 1, it has level 2, And I told you that at the level 2, it is when the market is offering liquidity. And for it to offer liquidity, it has to break one top, or it will have to create double top. It will have to break one bottom, or and then create double top. Now you have double top, you have double bottom here, and you have double top here. So what is the market going to do? The market makers have two options to make. It's either they clear it from up and they clear it from down. Now remember that it is up that they offered first. So what are they going to do? Meanwhile, this market is at level 2. So what do you have? The market will have to clear this thing. This is the manipulation stage of the market, which is the third stage of the market. And there are three things that happens in the third stage of the market. The third stage of the market goes to a fair value gap. One. The third stage of the market, for the market to go to the third stage of the market, it will have to come and clear this internal liquidity that is down, this previous low that offered this market this side to be double top. So they will have to come and break it. Look at it, they broke it here. So when they broke it down, what will happen? When they broke it down, remember that I told you that there are only two things that happens in the market. The market is either offers liquidity to create either double top or double bottom, and then or the market will clear liquidity. Now it has done the first thing, it has offered liquidity. One, two, you have double top. What are you expecting? You are expecting the third stage of the market, which is the manipulation. Now when the market is manipulation, the market manipulates on three candles. There are some things that are beyond the scope of this particular class, this particular lecture. If you want to be part of my program, I'm going to be dropping my WhatsApp number below the video, where you chat me on WhatsApp and join my inner circle, where I actually teach you the secret of the market. There are some things I may not be able to explain here because they are beyond the scope of this class. Now, let me clear this thing so that I will teach you something that you don't know. Now, when the market cleared this particular place, when the market offered liquidity 1, liquidity 2, came back or cleared this double bottom, which is what we are expecting because it is in line with our price action trading strategy. It is in line with our trading plan. So we know how the market is booked. Now, talking about the manipulation, now I told you that the market manipulates in 3 candles, only 3 candles. It offers internal liquidity, which is level 1, which is this thing. The manipulation, which is this is internal liquidity. Now you have a high, you have a higher low. Recall that this low now, now this one becomes internal liquidity that came down. What are you expecting? You are expecting a new high, which is this thing that happened. When you are expecting a new high, what is inside that new high? There are some footprints, there are some indicators, there are some things that will tell you what the market is going to do. You don't just enter the market. I told you of PDRs. There are PDRs that the market produces, and when the market is producing those PDRs, you begin to monitor the market. If you understand, there are things that the market does. Once you know those things, you will know the state at which the market is on. The market does like 4 things on the trend. Whenever the market is trending, there are 4 things it does. So it's less for you to understand that this is where we are now, and for you to understand this is where we are now. That is the secret of the market. Now, when the market was going up, if you take your Fibonacci, that is premium and discount ratio. That is what I'm talking about. That is what I'm going to talk about now. If you take your Fibonacci and divide this thing into 2, whenever it watch the market, whenever it returns, the market will be reacting at that 50% ratio. The market will react at 50% always. Just this is a secret that nobody who understands this thing will not open up to tell you. But it doesn't remove anything from me. I always tell you. It's left for you to understand that this guy wants to be very, very sincere to you, and then you bend your head down and learn. You are not owing me, I'm not owing you. I just want to pass this knowledge. Whenever I pass this knowledge and it becomes useful to you, you take it and be useful to yourself and to your society. You use it to teach another person and it will continue. Look at how the market is manipulating. If you take this thing and take this thing, divide this thing into 2, you see that this is 50% ratio. Where did that 50% happen? It happened at this internal liquidity. Where this internal liquidity happen, that is the 50% mark. Now when the market return to this place, the market instead of breaking this particular place, since it has manipulated up, it came to this place and offered liquidity again. One, two. When they offered liquidity again, what did they happen? They manipulated it. Remember that I told you that the secret of the market is whenever it is manipulating. Now the market has manipulated up and it has manipulated down too. That is why I told you that there is a balance pressure range. The market makers have finished their business at this stage. They don't have anything to do again. What did they do? They now created a new high. And when I thought, remember in my previous class, I told you, I taught you about trading range. I said the trading range is when the market, the previous high or the previous low that either caused a break of structure. If you look, this was the previous low. When this market manipulated, when this was level 2, when this market and this offered liquidity here, you saw that liquidity here, the market had to come down and manipulate it. When it came down to manipulate it, what happened? It offered liquidity here again, and this one. So it has to manipulate again and come down. This is a balance pressure range. And this particular thing, that you see that this was a low, this was a low. These were almost equal lows, and then the market created a new range because it created a new low. So it is from that place that the market created a new low that becomes a new range. So when you have this range, whenever the market comes and takes out the range again, look at this same thing. I'm teaching you about manipulation in the market and trading range, how the market manipulates. Look at this. This is level. This is top. This is top. Yeah, this is top and this is top. This thing becomes liquidity. These are internal liquidity. The market now came and broke this structure, created a new high, manipulated. This is just a manipulation. They want to, it's like Judas. We call this Judas swing to some extent. Just like Judas that was trying to lure Jesus Christ. To lure Jesus Christ. Jesus Christ was thinking that he was with Judas. Unknown to him that Judas has actually sold him. His mind was the other side and Judas' mind was the other side. That is what the market does. So that is why we call this thing Judas swing. Because it is taking you the wrong way. It is manipulating you. They are targeting your money. Their interest is just to take away these people and take away these people. Now that they have finished this business down here, if we follow this same thing that we'll be talking all this while, they have finished their business here, they have finished their business, they have bottom here. What are they going to do? They manipulated and offered this. They have top, they have equal top here. They manipulated and cleared people. They have equal bottom. What is left for them? Down is left for them. Now the market came to this place. This was the low. You see that whenever you have what we call break of structure, whenever the market breaks structure, it will have to manipulate again, and when it has to retrace again, and when it is retracing, where is it going to? You look at the arrays, you look at what the market, the stage of the market, you know where the market is. Now when you break a structure, the market break a structure and return to this place. By returning to this place, if you take this thing and divide this thing into 2, you have 50%. That is where it returned, because you have a fair value gap at 50%. The market has returned. Where did it return to? This was the last Asian range. That's the secret of the market. There are some things here that may not be able. I can tell you that the market is booked on price and time. Price and time. This is price. What happened? The market manipulated here. They manipulated these people on this double top. They manipulated and took them away, which is price. They came down and broke structure, which is a price. Now, when they broke structure, what happened? They had to return. This was a pullback. Where did they return? They returned to that particular Asian range, Asian consolidation. That is the point of manipulation. So this is a balance sheet. The market has balanced this particular place. If you enter this trade here and put your stop loss just some pips above this structure, there is nothing that will make this market to return up again. They have balanced here. They have manipulated. They have double bottom here. They have broken structure. Look at how many factors. They have returned to 50% mark. Recall that I told you that just like with the principle of demand and supply, Whenever you want, in the principle of demand and supply, you buy low to sell high. When you buy this market here, down here, you sell at a higher rate and make profit. If you are selling your market at this down, it means you are selling it very, very high, very, very cheap, and nobody wants to sell his market cheap. You want to sell your market at a higher rate so that you make profit. So this is the principle of demand and supply still applies on this market. The principle of demand and supply also applies on this market. Guys, don't forget to subscribe to my YouTube channel. Follow me on all my social media platforms. Subscribe to my YouTube channel. Hit the notification button so that whenever I post a new video, you see it. There are some things here that are beyond the scope of this particular class that I can't actually explain to you here, even though I'm saying them. You need to be part of my inner circle to be able to follow me up where I hold your hand. You join other of my students and interact with them. Where I give lectures almost on daily basis. I tell you what is happening in the market. I tell you how the market is going to be booked and all that. These are seasoned arrays. These are seasoned price action indicators. You don't, if you are using a moving average and all these things, they will always fail you. But if you have parameters, if you have factors that you work on that determines what you do in the market, you see that you succeed as a trader. There is no two ways about it. You will always succeed in the market as a trader. So I am willing to hold your hand, teach you how the market is booked and all that. So guys, let's go into the market briefly and then we'll do some analysis, and from there we'll round it up. So I am on 4 hours time frame. This 4 hours time frame, I use it to determine the bias of the market. I use it to consider, look at the market from the bigger perspective. I know that the markets now, we are in a downtrend. For now, we are in a downtrend. Meanwhile, as we are in a downtrend, what is the structure of the market? If you look at it from the bigger side, you see that the market has manipulated up. Now it has manipulated. What is left? It has manipulated down, broke this structure, returned to this place. So what do you have? What you have here is a break of structure and return. Break of structure again. So what you have, this is the new range. This is the range that caused the break of structure. So you can put up your trade. If the market comes to this place, you decide to put up your trade, you have your stop loss just some pips above this, knowing that it will not take it. So your risk will be from here up to here. And you look at your take profit, you have all this. This is sell side, buy side imbalance. This is CB. This is this is a balance. The same thing that happened this side. You see that the market returned. What is left? You still have this. If you have this, the market returns to this particular place. You see that it is balanced in the sense that if you take this particular thing, look at this. There is something here that I may not be able to explain to you now because you don't have the eyes to see it. But you need to learn. You need to join my class so that you understand it. If you take this range from here to here and divide it into two, let's do it. If you take this range and divide it into two, this is what you have. You look at it, where is the 50%? This is the 50%. That is why I marked this particular thing. Are you seeing it? So there are some things that are hidden that if I don't explain to you, you will not understand until I hold your hand and open your eyes to this reality that you understand what I'm saying. Whenever you have a manipulation, whenever the market breaks structure, it has to return to a particular PD area. That area is the secret of the market, and I'm willing to show you that area. Tell you the conditions that will happen before the market returns to that particular place. So if you want to be part of my inner circle, I'm going to be dropping my WhatsApp number below this video. I intend to be an empower. I intend to be somebody who empower people financially. Who it will be my legacy. So I'm willing to hold your hand and teach you what is happening in the market. So if whenever the market returns to this particular place, this range, we will be expecting the market to pull back. Whenever this is what we are looking at. We are looking at the market returning to this particular range within here, anywhere within here, and you begin to see a break of structure. Then you have this, or you have an internal liquidity here. Then it will take again, offer liquidity. Then you have this. This is what you should be looking at in the market. Then it will manipulate. Recall that this thing is internal liquidity already, and you have this. Whenever you have this V, the market will have to take out that V. Just notice this thing. Whenever you have this V, the market will return. The market will always return. The market will always return. When the market came to this particular place, this internal liquidity was almost at 50%. So it came and offered double top here. It shows you that the market is going down. Meanwhile, this is liquidity. This thing now becomes liquidity. This one becomes liquidity. So you have this. You have this. You have this range to play with. You have this range to play with. This range. You have it to play with. And you have it to play with. You understand? So let's go to the lower time frame so that we understand what is happening in the market in deep. Now let's go to 1 hour time frame. You recall that when that you use your higher time frame to understand the bias of the market, know what the market is saying. Then from that place you can be able to build down. You have known the bias of the market. From there you build up. You go in. You go in when you want to attack an animal. You watch it from a distance. When you watch it from a distance, you know how the animal is. Then you begin to gradually go close to the animal. Look at it. It's the same thing that happened on the higher time frame. Look at it. This was double, almost double bottom. This was double bottom. This was double bottom. And you have this. What do you have? You have level 1. You have level 2, which offered liquidity. This is double top. You have this. You have this. That is why the market manipulated. Where did it manipulated to? It was this Asian range. This same thing, Asian range, manipulated when it returned. When it returned to this place, where did it return? It returned to the same Asian range. This is just the secret of the market. If you understand this thing, you'll be free from all these things. You'll not be stressing yourself. What is the level at which the market is? Recall that I told you that whenever you have this V, it is going to create this V. This side becomes internal liquidity. This side now becomes internal liquidity. So you are going to break a structure. You are going to break it down. You are going to. Meanwhile, if you look at this was the previous low, and you have this particular thing, as in retail traders will tell you that this is a trend. This is a trend. The market makers understand that you have your stop loss here. They will come and manipulate you. When they manipulated, what happened? This was a fair value gap. This was a fair value gap. This, and it is coming down. Where did it return to? It offered liquidity. 1, 2. It has offered liquidity. What do you have? This was a break of structure. They broke this particular place. As they have broken this particular place, you know that the pressure of the market is to the downside. It is not on the upper side again. It is on the downside. So anything they are doing should be tilting to the downside for now, until you have a break of major structure. That is where you begin to look at the markets from the perspective that maybe the trend has changed or what. But for now, we are still on the downside because we have not taken a major structure. What is a major structure in this market now? This was the trend that caused it. This was the high that caused this particular break of structure. So it is the new trading range. This is the range we are trading on. This market, where did it return? If you mark from here to here on the Fibonacci, you see that this was a 75% range. And I told you that anything after 50 up is a premium. You can sell your market anywhere at the premium, and you can buy anywhere at a discount. Anything below 50 is discount. Anything above 50 is a premium. So now let's go in. Recall that we are still bearish for now until this structure is taken. This structure that caused this new low is taken. Whenever the market takes it and holds, then you know that you now have a break of structure. You begin to look at it. You begin to look at the areas. What are the areas that are in the market? Where do you sell? Where do you buy? Where do you buy? If it is holding on a fair value gap and is causing a break of structure up, then you know that the trend is to be up. So guys, I will be going in. Let me go to 15 minutes and then I'll wrap this class up. I am almost done with this class. Let's take to 15 minutes, then I'll wrap this class. So guys, this is it. This is the structure of the market. Recall that this market, you have a double bottom here, and when you have this and you have this, it is the same thing all way around. Once you understand what the market maker does in the market, they can't change. These algorithms cannot change because you understand the market now. This algorithm cannot change because you know what they are doing. They have the money. There will be always newcomers in the market who will be liquidity to the market. So the market makers understand that people are coming into the market every day, and people come with fear, FOMO. People come with greed. These are the factors that play in the market. So the market maker understands it, and he will always deal with your emotion. He understands the emotional stimulus, what plays in you. You are in debt. You look at yourself, you say, I am in debt now. I need to go to the financial market to make money. They say there is money in FOREX. Then you go there, and out of greed, you bring in your $100,000. You don't know anything that happens in the market. You bring in your money. Why won't they eat it? They will always eat it. So they will always eat you because you came with greed. Now what happened in the market when they offered double top, this is top, they had to come here and manipulate it. Once they manipulate the top, what is happening? You have level one in the market, you have level two, the market return. But the same thing, they broke this structure, they blocked this structure, they offer liquidity here. They came to this place. This now becomes what they are now going to manipulate. They are manipulated. They don't have anything to the upside again. They don't have anything to the upside again. Recall that this is the new range you are trading on, because it caused a break of structure. So if you take your Fibonacci and divide this thing into two, this is what you are going to have. This is going to be the center. If you mark this in that way, this is going to be the center. This is going to be the center. There are some things that I see here that I may not be able to tell you. This is going to be the center of it. Now if you take this thing and divide it, now I told you that anything outside, anything above 50 is at premium. You can sell your market at premium. As a professional trader, you cannot buy market at a premium. If you are buying market at a premium, it is high already. So you don't buy market at premium, you buy market at discount and sell at premium. You understand? So this is what you are going to have. If you have this, you have this. The market has manipulated. You have liquidity. This is now trend line to retail traders who don't understand what the market is happening. What is happening in the market? They say the market is still returning trend. That is, market is still obeying the trend. They will bring their stop loss and put here. Some will put their stop loss. Some will put their. The market makers understand where your stop loss is. They understand what is going around your memory, what is going around your brain. You don't know anything about the market, so they will always cannibalize you. You are like a prey to them. That is what the market maker does. So they will manipulate you. After manipulating you, what happened? This became structure, this became structure, this became low, lower low. What do they have? They will strike you once. Look at it. They are eating these people, and their business is in hitting people's stop loss. They hit your stop loss, they know where your stop loss is. What is happening again? These are double bottom. This is a balance pressure range up. They will have to balance it down. That is why I am bearish. I'm still bearish on GBP bro. I'm bearish because I have a fair value gap here. So I'm still bearish. This market is coming down. That is what is going to happen. Nothing will change it. This is how the market is booked. This is the principles onto which the financial market is booked. But for you to understand how the financial market is booked, you need a mentor. You need somebody who understands the market, somebody who will hold your hand and teach you what is happening in the market. And that's why I am here to teach you, to emancipate you from the burden of societal failure, to emancipate you from the burden of failure, from the burden of lack, where you live your life freely. Just chat me if you want to be part of my mentorship program. Just chat me on WhatsApp. I'm going to be dropping my WhatsApp number below this video, where you chat me and I will hold your hand. Briefly, just $1,000, I'll hold your hand and teach you what is happening in the financial market, and you begin to make money. So thank you guys. Love you. Subscribe to my channel at Friday's Trace. Subscribe to my channel, hit the notification button, where I'll be teaching you so that you will not miss any video on my channel. Thanks guys. Love you.